New stock we're taking a look at today, Sweetgreen. Basically, they're like Chipotle, but for salads. Just found out about this one when I was in Texas a couple weeks ago. But yeah, basically, it's all salads. You make your own salad, or you make their pre-made ones. They got protein plates. Some of this stuff actually looks really good. The market, this is new. Sweetgreen Market. So it looks like they're coming out with a Sweetgreen Market coming soon. And they're expanding to a lot of places. You got Scottsdale, Lower East Side, Bentonville. You got Ohio, Cincinnati, Long Beach. So a lot of new openings happening for this restaurant. Currently going for only a $1.6 billion valuation, $14. Year to date, it is down 56%. Looks like it peaked around fall of 2024 at $43, down 67% from that peak. This is the sort of stocks that I like to look at. Ones that are currently having a lot of negative sentiment in the short run. But if the fundamentals still look good, as you could see just from looking at the locations chart, they are still expanding. They are still opening new stores. But the stock price keeps going down. So let's take a look at the fundamentals today. All right, first things first, let's see. Insider trading. 13% of the insiders own it. Short? Okay. So it's getting shorted. 18% short float. That's interesting. Let's take a look at the Fintel. 18% short interest. We just got a recent downgrade to hold from TD Cowen. Downgrade from JP Morgan. No insider buying. Oh, wait. We just got a recent insider buy 2 months ago. He spent $250K back in May. So we have one insider buying back in May. Okay. And he's buying it around the $13 range, which is pretty much what it's going for right now. Institutions are piling in. We have the highest amount of institutions holding this stock right now. Just a couple notes to read off why in the past 2-3 quarters the stock is down so much. According to the latest transcript, the LA wildfires and the lingering impacts from those wildfires have greatly affected their revenue and also their cash flow. They also talked about macro environment remains uncertain and volatile. And lastly, we have April sales trends were soft because of consumer slowdown. Those were the top reasons. So consumer slowdown, impacts from those wildfires, and just the macro environment in general just remains a little uncertain. Let's go ahead and pull up the most recent fundamentals. So today, total revenue, earnings per share, profit margins, cash flow, and of course bottom line net income. Let's go ahead and take a look. We currently are at 2 years of consecutive top line growth. So first quarter of 2025, they posted 166 million versus 157. That is only up 5%. You could kind of start to see a slowdown in the third quarter of 2024. So as of right now, looks like they have some fixing to do. Anyways, earnings per share. So if you take out fourth quarter of 2024, down just slightly 4% year over year. It would have also been 8 quarters of consecutive earnings per share growth. But as of right now, latest quarter, they posted negative 21 cents versus negative 23. That is up 8% year over year. We saw a little drop on the profit margins from the first quarter. And then also when you take a look at free cash flow down here, you could see from the fourth quarter and the first quarter of 2025, major declines on their cash flow. This is mainly why the stock is crashing, because their cash flow is being greatly affected through consumer behavior and also those LA wildfires. I mean, cash from operations alone, negative 13 million versus positive 3 million. That is down 485% year over year. So the all-time low looks like it's around $6. And then when you take a look at free cash flow per share, 2 consecutive quarters of declining free cash flow per share, down over 180% for 2 consecutive quarters year over year. But when you go to the bottom line, it doesn't seem too bad. Posting negative 25 million versus negative 26 million, that is up 4% year over year. So bottom line is steady, but they are getting affected a lot on their cash flows. So we'll go more into detail into that. Let's go see what's happening on their balance sheets real quick. Okay, so balance sheet, let's take a look at the latest data. So latest report on cash, they have 183 million. Okay, we go down to long-term liabilities, no long-term debt. All right, no long-term debt. So instantly right there's no way this company can go bankrupt. They also have lots of net property, plant, and equipment, a lot of real estate. They own a lot of real estate property. 560 million in net property, plant, and equipment. Let's take a look at the annual for the cash flow. We're going to get a little drop in the free cash flow and cash flow from operations in 2025. Okay, so same-store sales for the first quarter declined 3.1%. But again, they are currently opening new restaurants. We opened 5 restaurants. They have a total of 251 restaurants now. So they are currently still opening restaurants. That means they're still growing. That means in the long run, they'll be fine. So in the first quarter, they opened 5 new restaurants, 2 new Sweet Lane locations for 2025. And they started opening these things called Infinite Kitchens. Let's take a look what these are. So for the total of 2025, their plan is to open 40 new restaurants. In 2025, they're going to open 40 new restaurants. That's going to be huge in the next 2 to 3 years. So depending on how those restaurants do in the next year or two, we could see a little turnaround on this stock. But let's take a look at this Infinite Kitchen. This is a whole new concept.
We call it the Infinite Kitchen, a new kitchen that helps us simplify things so we can bring in more of what matters. For a Sweetgreen experience that's fast, fresh, and friendly, where every meal begins and ends with human hands, from our local farmers to our team members, all there to guide you through the process. We're excited to introduce you to a brand new Sweetgreen.
Wow, so it looks like they're going to be opening up some self-automated Sweetgreen locations. So that's what the Infinite Kitchen's all about. So they are trying to innovate the fast food space. That's pretty cool. And then they also have Sweet Lanes, which looks like they're drive-through locations only. So it's their drive-through concept, allows customers to order ahead online and pick up their food without leaving their cars. So just a drive-through location. They're taking a page from Chipotle's playbook with the new Sweet Lane drive-through. So they have Sweet Lanes going for them. They also have Infinite Kitchen going for them. All right, so at a $1.6 billion valuation, you're getting it cheaper than it was. You're getting a good deal. I think this is a good deal at these prices if they could turn things around. So it looks like they are still unprofitable. Another reason why the stock has been weighed down. They are still unprofitable. Net income is still negative. Earnings per share are still negative. And they also are currently having a slowdown on their free cash flow. 2025 looks like is going to be a year where they try to turn things around, and then into 2026 after the opening of the 40 new restaurants, we might start to see some improvement. So we might start to see some improvement in this stock into 2026. Remember, we have one director that started repurchasing shares. So the directors will always know more than us. This is a good sign. Soon, in the next couple quarters, we might start seeing other directors start purchasing some stock. And they have the Infinite Kitchens going for them. Some numbers on that. The Infinite Kitchens have been popular. First quarter sales have grown 20% year over year. And the restaurant level margins on those Infinite Kitchens are way above the normal restaurant that the normal Sweetgreen restaurants that they open up, with minimal incremental costs. I believe they're only spending like $500,000 to open these Infinite Kitchens, and they're a hit. Again, they also have the market that they haven't really talked about this yet. They are currently hiring automation, marketing, operations. So they are still hiring. Let's take a look at the latest news. 740 to 760 million in revenue for 2025. Revolutionizing fast food with menu and technology innovation. Again, new formats like the Infinite Kitchen and Sweet Lanes are driving better operational efficiencies, enhancing guest experience. Lastly, they did just appoint a new COO. Let's take a look at this guy. He is from Pizza Hut and Chipotle. So that's pretty good. They're bringing someone from Pizza Hut and Chipotle to strengthen operational execution. Vice President of Operation Services at Chipotle. Okay. So this guy definitely knows what he's doing. But yeah, oh wait. GameStop. Jason also spent 14 years at GameStop, where he held multiple senior leadership roles, including senior vice president. He's from GameStop. I mean, guys, I'm buying this stock now. Yeah, looks like this could be a good turnaround, guys. This is going to be a good turnaround company. Down 67% from their peak. What did it IPO at? It IPO'd at 53 in 2021. So from the peak of $43, down 67%, $1.6 billion valuation. I think this could be a great turnaround, guys. Let me know what you guys think in the comments below. New COO, Infinite Kitchen. We got some insider buying and all-time high on institutional holdings. Lots of cash, no debt. I think this company could be a good turnaround. Let me know what you guys think in the comments below. Don't forget to like, subscribe. Thanks for watching my videos, guys. Everyone have a good night, and we will see you on the next one.